This video is a presentation of BizVisor, where we have 33 years of business and financial analysis experience. These are our offices at 1087 Stone Ridge Drive in Bozeman, Montana. We're going to talk to you a little bit today about the important topic, the #1 tool you can use to sell a business, and that is seller financing. So let's listen a little bit more to how seller financing can help you sell your business. Hi, this is Russ Squire from BizVisor. I just wanted to talk to you as a seller of a business today about the #1 most important tactical strategy that you have available to you to get your business sold for the best price and in the least amount of time. And that particular strategy is seller financing. If you seller finance a business, you have to think from a buyer's perspective. How does that buyer feel? What questions do they ask? Well, I'll tell you the #1 question we get asked from buyers, and that is, does this seller have the confidence that this business is sustainable? And when you offer seller financing on your business, you are telling that seller or that buyer that you believe that the business has absolutely 100% chance of succeeding. So you want to consider doing some type of seller financing. We generally recommend right around 5 to 7 years. 5 to 7 years is 7 years is the depreciation schedule for equipment and personal property. But there's another big benefit to you as the seller that you really need to consider. And that is the fact that if you sell your whole entire business in 1 year, let's say you sell your business for $1 million and you take receipt of that entire $1 million. That $1 million is going to get added to your taxable income in that year. And you know exactly what that means. Top tax bracket, 39.6% federal, AMT tax. You're going to get slammed 6 ways to Sunday on the receipt of all those gross proceeds at one time. So you want to consider carefully the tax implications of how you sell your business. If you sell your business over 5 years with a receipt of $200,000 in each of the 5 years, it changes your calculus completely for what you are going to have to pay in terms of income taxes. So you want to consider pretty darn carefully the offering of seller financing when you sell a business and how you structure it, what the terms are. Right now, for instance, SBA loans are roughly 6%. Now I see sellers all the time trying to finance 5 years, you know, maybe 30–40% of the business for 5 years, but at an 8% rate of interest. Well, who's going to do that? I mean, nobody. If you can get banked with the SBA, why would you possibly want that seller financing? So seller financing with a high rate of interest is only going to attract the wrong kind of buyer. It's the kind of buyer who can't get qualified with the SBA. So think that one over very carefully, because the types of terms that you offer are very important to the types of sellers that you will attract. And smart sellers that have a good amount of money, that are well qualified, aren't going to mess around with seller financing that's way out of line with what they can get at the SBA. So think that one over. Really think you ought to consider the tactic of seller financing, you know, up to as much as half of the business or even more if you're comfortable with it. And you can afford to live with those proceeds coming out over a period of, say, 5 to 7 years, because that to you is going to save you on income taxes, and it's also going to help you find a better seller. For BizVisor, this is Russ Squire. Thanks for listening.